Hello, good morning, everyone. Welcome to our daily briefing today. So today, which is November 25th, so which is Thursday. So let us begin our daily briefing by take a quick recap on previous important economic data. So the first one is RBNZ interest rate decision. So previous is 0.5% and the forecast is 0.75%. Actual is same as the forecast, which is 0.75%. So we can see that the Reserve Bank of New Zealand, they increase their interest rate. They raise their interest rate by 25 basis points. So this is actually a good news, really a good news for the New Zealand dollar. And then we go to the next one, which is the Germany IFO business climate November. So previous is 97.7, forecast is 96.6, and the actual is 96.5. So this is slightly lower than the forecast. So this is not a good news for the euro dollar. And then we go to the next one, which is the US durable goods orders month-to-month October. So previous is negative 0.4%. The forecast is 0.2%, but the actual is negative 0.5%. So this is lower than the forecast. So this is not a good news for the USD. I mean, negative for the USD. And then the next one, which is the US GDP growth rate quarter on quarter second estimate Q3. So previous is 6.7%. Forecast is at 2.2%. Actual is 2.1%, so slightly lower than the forecast. So this is another important economic data, not good for negative for the USD yesterday. So the next one, which is the US initial jobless claims, 20th November. So previous is 270,000 and the forecast is 260,000. But the actual is a lot lower than the forecast, 199,000. So this is actually a really good news, positive for the USD. Because this is the first time, okay, it is lower than 200,000 since the pandemic. This is the first time, okay? So we go to the next one, which is the US Michigan Consumer Sentiment Final November. So previous is 71.7, forecast is 66.8, actual is 67.4. It's slightly higher than the forecast. So this is another good news, another positive economic data for the USD. And then we go to the next one, which is the US personal spending month-to-month October. So previous is 0.6%, forecast is 1%, and the actual is 1.3%. So it's slightly higher than the forecast. So this is another positive economic data for the US dollar yesterday. Okay, so we go to the next one, which is the US PCE price index year-on-year October. So previous is 4.4%. Actual is 5%. So this is, we can see that the inflation situation in United States that is getting worse and worse. I mean, it's getting higher. Okay. So the next one, which is the US EIA crude oil stocks change, 19th November. So previous is negative 2.101 million and the forecast is negative 0.481 million, but the actual is 1.17 million. So this is higher than the forecast and this is negative for the crude oil prices. Okay, then we go to the next part of our daily briefing today, which is the previous day market volatility for gold. It's declined 280 pips, okay, for yesterday. So what about, let's read the factor here. So spot gold fell to a 3-week low on Wednesday, which is yesterday. So earlier in the session, okay, so it fell to the lowest level since November 4 at $1778.70 per ounce. Because of what? Because of the strong US economic data boosted the US dollar and also the yield of the US treasuries. That's why the gold fell down yesterday. So this is the reason. Okay. Then we go to the next part, which is in EU session today, we have to focus on this important economic data. So let us take a look on the first one. So Germany GDP growth rate year-on-year final Q3. So previous is 9.8%, forecast is 2.5%, and the schedule is at 3 o'clock later. Okay, so if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. And then we go to the next one, which is the Germany GfK consumer confidence December. So previous is 0.9 and forecast is negative 0.5. The schedule is same at 3 o'clock later. So if higher than expected reading is positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. Okay. Then in US session today, they don't have any important economic data we have to focus today because today is the Thanksgiving holiday in United States. So there's just only some speeches we have to focus. So at 9:30, Euro Central Bank President Lagarde will have speech at 9:30, and also 1 o'clock in the midnight. So Bank of England Governor Andrew Bailey will have speech at this time. So we have to focus on these two time. Okay, so we go to the next one, which is the last part of our daily briefing today, which is the market update for gold. So the resistance level of today is 1802, and the support level of today is 1778. So my personal opinion, I will take it as a range for short term, but if for long term, I will still take it as a bearish movement. Okay, so range for today and also tomorrow, but for long term, I will still take it as a bearish. Okay, so let's read the factors here. So why range? Because today is holiday, so I predict there's don't have much market volatility today and also tomorrow. Okay, so let's read the factors here. So the US data on Wednesday is generally optimistic, but the high inflation make Fed officials and consumers to worry about it. So the Fed may raise interest rates ahead of the schedule. So this is actually a good news for the USD. So that's why I will still take a bearish movement, predict the bearish movement for the gold prices. Okay, so which will continue to support the strength of the US dollar and the downward pressure on gold prices. So it is expected that gold prices will continue to run weakly in the short term. So on Thanksgiving Day in the United States today, US stocks are closed, and the trading of the precious metals under the Chicago Mercantile Exchange will end ahead of schedule at 2 o'clock on the 26th, which is midnight, 2 a.m. later. Okay, so that's why there's no much market volatility for today and also tomorrow. So because of the Thanksgiving holiday. So that's all for our briefing today. So wish you have a good day and see you again.